All right, so I'm standing between you and I presume cocktails and so on. So I'm gonna probably not use all my slides. You're gonna see me whip through some pretty fast because I do want to get to the punchline at the end, which kind of pertains to Copier's challenge. The rise, we have the fall of CBDC, and so I've been tracking this stuff since 2015 or so. And I've been building this chart and producing it when I was at the IMF back in before 2021. And this is the one I would always show. It's very impressive. It shows the cumulative growth of CBDC explorers. But I think it's actually outlived its usefulness now. I got some new versions I'm going to show you later because what it shows is the cumulative. What it doesn't show is who's dropping out of the race, and there's a lot of them actually. And we know that some have launched and they've canceled. We know that some have started research and they just let it quietly fizzle out. So I'm working on a way using the famous cbdctracker.org database to measure that decay, and it's quite striking. You'll see. But first of all, I mean, in case just to make sure we're on the same page definition-wise and so on, I always kind of like to go through the definition of CBDC. So central bank money is the very broad term for that, for what a CBDC is a subclass of. And a CBDC is a digital payment instrument, and it's denominated in the national unit of account. So if it's going to be a digital euro, it has to be a euro. It can't be based on some other country's currency. And it has to be a direct liability of the central bank, which trips up some people making a claim that, I'm working on a cool new CBDC, but it turns out that it's actually issued by the government or some private company that's got the blessing of the government. But, CBDC has to actually be issued by and backed by and a direct liability of the central bank. And we have two broad classes of CBDC. One is wholesale, and that's not what we're going to talk about today. This is basically the modernized version of the central bank reserves that commercial banks trade with each other to settle accounts and so on. And that's something to me, I think actually this might be a more exciting area than retail CBDC, because I think real stuff is happening here, stuff that reduces risks and moves money faster and settles securities faster. So, but we're not talking about that today. We're talking about the retail or general purpose CBDC that is widely available to the general public, including banks and depository institutions, and it can be used to, ideally, at least the CBDC dreamers hope that it's going to be used by people to pay for their coffees, do shopping, and so on. So it's truly a retail CBDC. I differ with this, and I'll tell you why later. Where are they being explored? Now, I'm not going to ask you to read this. It's really tiny print, but this is what I publish on my web page. And anybody wants to contact me, they can get these slides and they can have access to this table. So this is first hint of what I was talking about earlier. This table shows the 115 plus two. I will say plus two because there were two CBDCs issued in 2014-18 by Ecuador, and then Finland back in 1993, 2005. And so we've had 4 full launches, and this is where we get back to that nuance I mentioned earlier. We've had full launches, but I mean they're not saying it, but Nigeria launched the CBDC, and it looks like they're just letting it die. And so there's probably really only 3. But I do all my data gathering on the basis of publicly available information, so I stick with what they say for now. And there's been 12 pilot launches, and these are basically small scale launches that do involve the general public, but often in small communities and so on. There's a very large pilot taking place in China. It's been going on for some time. India too is a very active pilot program, trying different permutations and combinations of design. And then we've had 22 proof of concepts started. And proof of concept sometimes get mixed in with pilot. You'll see a central bank saying we're doing a pilot, but it's really just a proof of concept. The difference being that a proof of concept is usually more like a lab experiment. In the case of Ukraine, for instance, they did what they call a pilot, but when you look closely at it, they're actually using central bank staff to test this CBDC. So it's not quite a pilot. They're using kind of safe, and they're in a safe place here, working with their staff. And then there's 77 that have just seen the start of research, and there's quite a mixed bag in there. I think, but many of these would be emerging market countries where the evidence that I go from there is some central bank governor has a speech, and he says, we're very excited about the digital economy and so on, and solving financial exclusion, and so we're starting to work on CBDC. And then you never hear anything from them again. And the green ones are what I call the live ones. So this is a bit out of date. I now count 34 of the 115 as being live right now, where they've got an active launch, pilot, proof of concept, or I have some evidence that they're still doing research. And that evidence for this purpose here is that they've at least published a white paper or given me an update within the last year. And so all the ones that are not colored in, they're ones that they've just kind of dropped off the screen. Like Macau, they did an update in 2024, heard nothing since. So and as we'll talk about a little later, is that, I mean, I think a lot of central banks are discovering that the best way to solve their goals that they set for CBDC is through fast payment systems, which just basically is like putting commercial bank payments on steroids and gives you instant payments and so on. So I think I've seen several central banks very publicly say that is the way they're going now. They prefer just to stick with commercial bank money and just put it on faster rails. So this is a map, shows that these are all the countries that are doing research. These are the ones that are doing proof of concepts, and these are the ones that are doing pilots and launched. We got some technical problems with the maps at cbdctracker.org. So, for instance, we know Kazakhstan has launched, but they're not the right color. But we're working on that. And these are all of them. So you can see that around the world, much of it is said they're going to be working on CBDC, and we'll see later, what the reality is there. And these are the two that started and then shut down. I always like to bring up the Finland's Avant system because many think that a CBDC by definition is based on blockchain or distributed ledger technology, and this precedes the Satoshi paper, so it's certainly not blockchain. It might be one of, you could say that maybe it was based on some predecessor version of blockchain, but in fact, it was based on a centralized ledger. So that's a key point here, that we talk about CBDC. It could be a centralized ledger or decentralized. It varies, and I'll show you a table of the ones where we know which one they're using. So in terms of motivations put forward to issue in retail CBDC, I like to split them into two in the emerging market countries and the advanced economy countries. So advanced economy countries like Europe, for instance, I mean, that first one in the top right corner is kind of a classic one that they would probably trot out, ensuring access to universal low-cost digital payments. In the case of Sweden, especially as cash usage declines, they want to have a public money option. And also improving payment system efficiency and competition, and that's important too. And then there's monetary and payment sovereignty, and we talked a bit about that in the last session, so I'm not going to deep dive into that. Emerging markets, they're usually looking to reduce physical cash costs. You see amongst the advanced economies, they will say, we're introducing a digital version of central bank money, but don't worry, we're not going to eliminate cash. But many of the developing countries, probably because of economies of scale and challenges in distributing money to very dangerous places, they would love to get rid of cash altogether and replace it with digital money. And so that's a motivation that's often raised by emerging market countries. Some of them are looking to preserve seigniorage revenue, and that usually means that they're kind of afraid of dollarization, which steals basically, and seigniorage revenue is basically the money that a central bank makes by, say, issuing banknotes, and that's on their liability side of the balance sheet. The asset side is are assets they can invest, and they make money on the spread because they don't pay any interest on banknotes. And so that's why the reducing currency substitution is kind of related to that one too. Substitution being substitution of somebody else's money for yours. And then improving payment system safety and resiliency. And a topic that comes up particularly there is the offline CBDC, which offline doesn't have to be a CBDC. You can layer offline on any payment system, but that's a big part of the discussions about offline. And for me personally, I think introducing a CBDC that doesn't operate offline, you might as well go home and forget about the project. And I know there's some controversy about the sequencing of offline online in the European case, but I think that Europe understands the importance of offline for resiliency. And then there's these sort of funky ones. There was a point where they were talking about remunerated CBDC, i.e. CBDC that pays interest, and that was particularly popular when interest rates were zero or negative. So they had this brilliant idea that you could have a remunerated CBDC that kind of becomes a monetary policy instrument. So when the interest rates get into the negative territory, you push the CBDC rate into negative territory too. The flaw in that is that everyone has the option of going back to cash in most economies. So they just once you get to that point, people will just switch out of your CBDC and into cash. I mean, they talk about ways they're going to restrict that switch over, but that's kind of an ugly public policy stance. And also, they're hoping to maybe get more data, which is a very controversial part of the CBDC story, which, you know, it links to concerns about privacy and payments and so on, but they hope to use the BDC to ramp up their fighting of tax evasion and money laundering and other illicit activities. And another one is I think I must want to push that one up there. It's distributed in government payments, and that is a use case that seems to have some legs in the CBDC world. We've seen India recently in their pilot introduced a scheme where they're distributing subsidies for grain purchases through their trial CBDC. So there might be something there. We talk about like what does the CBDC bring to the game that isn't there already. And most of the things you see on here can be done with another instrument, but that might be one of them, might be unique, a unique use case. So in terms of retail CBDC design characteristics, they're all going for what we call the intermediated model, which means basically they partner with banks and payment service providers to do all the hard donkey work of distributing and managing a CBDC platform. You know, central banks don't typically have ATMs and branches, and they're not set up for dealing directly with the public, so they usually will ask the banks to help them distribute their CBDC, which is a controversial topic, as you'll see in a minute. Also, transaction fees and remuneration. Like I said, the remuneration is kind of a controversial topic, especially if that could potentially be negative. But also, CBDCs like to reinforce this is like cash. We're not intending this to be a competitor with the banking sector, which could lead to disintermediation risk. Although that's been called crowding out risk. You crowd out bank deposits. I won't have time to talk about it today, but I'm very keen on the case for remunerated CBDC as doing something called crowding in, where you actually use a CBDC to, in effect, bully the banks to offer decent deposit rates and so on. And that's called crowd in. Someday, maybe next year, if I'm here again, I'll be talking more about that, because I think remunerated CBDC is a pretty exciting topic. And also, right now, the launched or piloted CBDCs don't charge transaction fees, but I think even in Europe, there's talk about how that will play out. There still may be fees, but they might be lower than the interface fees that are paid by merchants, or interchange fees paid by merchants to private sector players. And then to mitigate this disintermediation risk and run risk, there's concern that if the banking system fails, everyone's going to run into CBDC. That's usually done with limits, and if you have remuneration, it's tiered, so you pay a decent interest rate on, say, the first 3,000 euro, and then after that it's euro or something like that. That's what's called tiered remuneration. And then, of course, they have to comply with the AML CFT standards, and that's where things start to fray for CBDC, because they require information and privacy invasion actually to do this job. And I think the ECB sometimes uses the word adequate privacy or something like that, which is like, that's a really dirty word, you know, don't do that at all. It's so vague. Privacy is privacy, and I think that's another flaw in the CBDC's design. And then in terms of what data they require and collect, they sometimes apply what we call proportionality, where maybe they'll turn a blind eye towards low-value transactions and focus more on big transactions. So that might be something that will help out in there. So they would have tiered transaction and holding limits. And then particularly on the amount of information they want to collect from you, the more information you provide to them about who you are, what you do, and so on, and ID and so on, the bigger the limit might be. And some of the central banks have taken this so-called data firewall approach, in which they only see pseudo-anonymous data, but the banks that are working in partnership with them see the same data they always see. Like every time you do a transaction with commercial bank money, the banks are obliged to do certain data collection to fight illicit transactions and so on. They'll still be doing it in this case, but they won't be passing it on to the central banks unless the central bank makes a very formal request for that. And programmability, in smart contracts or something that are talking about to collect sales directly at the point of sale and make sure it gets routed to the right agency and so on, and maybe integration with physical devices and IoT and so on. That's a fairly exciting use case, and that's one that is being used in some of these pilots. New York Fed paper expresses doubts about it because they say there's questions with fungibility and the no question asked properties of programmable money. Because if you have a whole mixture of CBDCs out there with different smart contracts embedded in them, how fungible and exchangeable are those? But I think this Singapore Central Bank has a solution for that. It's called wrapped. I think it's called wrapped purpose-bound money. So once you do the transaction that executes the smart contract, the wrapper, which is the smart contract, goes away, and now it becomes a fungible CBDC. So there might be a way around that. And they're all talking about granting legal status to retail CBDC. I'm not going to go into that slide because it's very legalese. Then this is just the technology platform choices that we know about. And I'd just like to sort of put this one up here because you can see here, some of them are DLT, some of them are centralized ledgers. So anybody that tells you that a CBDC is based on DLT, that's not true at all. They're coming in all flavors. And then offline payments are particularly, that's my favorite topic actually. And I think that we might see something roll out in that case. And then in the case of Ghana, G&D, I guess they print money, that's the main job, but they have also got a CBDC platform in which they did a pilot of offline payments in Ghana, and it went very well. So there's different form factors, and there's a paper that was written at the IMF that I was part of that kind of goes into the details of all of this. But I think some of the cybersecurity concerns that people push back on offline payments can be solved and controlled. So that's my sense on that. And then I put this up here because this is the Death Star, right, from Star Wars, and this is what most central banks think of when they think of a CBDC. It's going to be this Death Star. It's going to be for everybody, for everything, and I think that's a flawed model, and that's why they're all crashing. And this is some of my new charts coming. So remember the one I showed you before, shows this constantly increasing bar chart. This one shows, first of all, which ones have launched, and there's not impressively many of them on here. How many are piloting, and then how many have been doing research in POCs, proof of concepts, and there's a lot more of those. There's a lot more talk and no action in this business. And I'm going to show you a chart later of fast payment systems, which very different from this because they're doing it. They're launching these things and they're doing really well. This is the funkier one that I really had to do some intense data work on, the CBDC tracker data work. So the black bar is the ones that at the end of each year, how many of those CBDCs were actually live, as I defined them before. That we've got a pilot in operation, it's been launched, there's a POC in operation, and or they've done an update. They've provided updates on their work in the last year. And then I've got this other one for 3 years for maybe we'll throw them a bone here because the emerging market central banks particularly are very secretive. Partly it's I think they just don't have a well-developed press area. Like you'll see them, they'll do their announcements on Twitter and then you go to the website for the central bank and you see nothing at all. And so that could be that there's a gap in their communication. But generally these guys like to talk about it. They like to show people that, hey, we're a cool central bank, we're right at the bleeding edge and we're working on CBDC. So I don't think that buys them much water. I think the black bar is the real deal. And then you can see that the excitement about CBDC kind of peaked 2022, 2023 or so. And you can kind of feel that in your bones too as you follow the press on these things, that central banks are just kind of quietly moving out of that and focusing on other things. So to me, these are my reasons for the underwhelming retail CBDC interest. So first of all, many of these countries have well-developed digital payment ecosystems. Like I mentioned before, you've got fast payment systems, you've got mobile money. Like in Brazil, they launched Pix, which is a fast payment system. I think it was like 2022 or something. Now it's being used by 80% of the population. And India's UPI, the same thing. And in fact, they're exporting UPI to other countries. It does all of the core things you'd want an ideal currency to do, like instant payment, instant settlement, and and operates easily in the digital world. So that to me is the main reason why I think most of these things are failing. And the ECB is going to face this one too, because in Europe you do have fast payment systems. You can do contactless payments and all these good things. So trying to convince the average Joe on the street that he should take on a digital euro to shove it in the face of Visa and MasterCard, I don't know. I think they might have to be very aggressive in their market and expose the interchange fees that that these network operators are offering. I think the best way is, and in fact Europe's doing this, to use regulation to cap interchange fees, and that solves that problem right away. And also they navigate this knife edge of design challenges. For instance, they reject remuneration because of this crowding out problem. And I say, well, why not give it a shot? And I do know of a central bank that's considering trying out a crowd-in based CBDC. It's a unique country with a unique banking system, but it would be good to see somebody do that. And then cash-like privacy is rejected in deference to financial integrity, AML, CFT, and all that good stuff. And this is a biggie too, and maybe this is where they got their bad name. They sometimes skip too quickly through the development process, and they don't involve all stakeholders. As I mentioned before, they all operate with this intermediated model. So they expect the banks and the payment service providers to all eagerly jump in and help them with their CBDC. And that just doesn't make sense to me, because they understand that if the CBDC gets too good, too popular, it's going to dig in, it's going to crowd out their own business. So you're asking your competitors to work with you, but that's not really all of it. In many cases, they don't involve those banks in the process of building out. I mean, I think Europe has followed a really exemplary process. They're plodding through the steps very slowly, involving stakeholders. So if anybody can make it work, Europe's going to be the one that makes the CBDC work, but it's still going to be tough. And as a little example, I mentioned Nigeria before, that they launched and then they it looks like they let it go. I was at a conference or a workshop, and I was telling everybody this was made up of bankers from Africa, including some commercial bankers from Nigeria. And I was telling them, I'm really puzzled. Why is it that the Nigerian CBDC is falling flat on its face? And these guys, they couldn't tell me this in front of all the other banks, but they came to me privately and said, well, guess what? That because we were so pissed off with the central bank, we're actually actively thwarting this thing. We're actually working actively to make sure this e-naira, as it's called, fails. So it's really important to do everything right. And as I say, I think the ECB has fallen a very good track in that regard. And also the infrastructure is not complete. And I saw this one myself. I was in the Bahamas, and they're one of the launch guys. They've launched something called the Sand Dollar. And I was at this conference, and they gave us this neat app, and I was able to use that app to buy stuff with sand dollars in the conference. They had these booths set up with people selling crafts and that sort of thing. And I thought, that's pretty cool, this works. But then I thought, I still have some money left on my wallet. Let's go and see what happens when I go into Nassau and try it at a store. They laughed. The storekeepers laughed when I said, do you take the sand dollar? No. And part of the problem is the infrastructure. Their point of sale devices haven't been upgraded. And that's an expensive proposition. They have to upgrade the point of sale devices to make sure it uses the sand dollar app. So, a lot of things are going to get right to make a CBDC work. And this is just more detail about those particular cases. But rather than what did I call it? The Star Wars, the Star Wars, what it was, the Death Star. Yes, right. Instead of the Death Star, I'm very keen on what is being called purpose-bound CBDC. And we've had several pilots that went really well. Hungary piloted issuing a CBDC to unbanked young people. And it had like a gamified approach to teaching kids how to, use money, save money, and think about money. And it worked really well. Got, almost complete buy-in from all the users and the parents. They just loved it. And the RBA, Reserve Bank of Australia, has also piloted various different use cases. Mind you, they're one of the central banks that have now dropped out of the retail CBDC world. They're focusing their efforts on wholesale CBDC. And Kazakhstan has actually launched, and from what I can tell, their approach to their digital tenge is, in fact, purpose-bound money approach. They have all these very niche cases for each one. I don't think they're aspiring right now to have it be the everything for everyone CBDC. And then the HKMA has also done some work on similar things where they just do multiple pilots and see which ones work. So I think there's some hope that a CBDC could play a role as purpose-bound money. And I think this is the main competitor for the CBDC, because fast payment systems, they can also provide instantaneous, efficient payments, lower costs, and available to the broader set of the economy as long as you got a bank account. This works for you, and so the difference is, of course, it's not central bank money. But and then the central banks will say, well, you should care that it's central bank money because it's the most riskless, most singleness. They use the word singleness to talk about digital money sometimes, and so it's the CBDC, because it's a central bank issued, is some kind of magic thing. But the problem with that is that for most people, the difference between public and private money is not really something they think much about, particularly in countries with deposit insurance. So if you're using commercial bank money and you have deposit insurance, the CBDC doesn't really have any more cachet or lower credit risk than central bank money. And like in the U.S., the limit on deposit insurance is $250,000, and yet I've seen some stat that says like only 40% of Americans have bank balances over $500. So for the average person, that doesn't hold water. The idea that it's central bank money and is less risky, and also as most of these FPSs are being rolled out by CBDC, by central banks. So for instance, PIX and UPI are both under the central bank umbrella. And I've done a count, and there's about, I don't know, this is the graph. So there's about 130 or so launched FPSs. And I think there's about 115 or so that are either owned and operated completely by the central bank or at least partially. So again, you've got this blurring of public and private money that I think is an interesting theme when people talk about CBDC. And so to me, this is the table I had earlier, but to me, if you want to motivate people to use CBDC, I think they all buy into the idea that, it's the idea of a universal low-cost digital payment instrument is good, and improving payment system efficiency and competition. Mind you, I would say that other payment instruments maybe do just as well a job, so it's not that powerful. I think distributing government payments is one that is catching on. Basically, I think I can't name the country, but this country that I was providing advice to the central bank in that may do the remunerated CBDC, all of the money they distribute goes through digital means. Unfortunately, most people go to the bank right away and cash it out, and they operate in cash. So this country, like 80% of transactions are in cash. So they're hoping that maybe, because they're distributing the money into bank accounts, they're hoping that if they distribute it into CBDC wallets, maybe it'll get more uptake and people actually won't empty their wallets. It was crazy. I went to this bank, and there was queues outside the bank of people lining up to, because they got paid every week, and they were lining up to go to the ATM and cash out. And in fact, the lines were so long, the bank had a canopied area with seats, so people could sit down while they're lined up. So it's that cash at that pervasive there. I got cross-border payments too, because I think everyone hopes that could be a use case for a retail CBDC. I think it's kind of a wishful thinking thing, because the cross-border payments is not all about technology. It's more about aligning regulations and interoperability and so on. There's so many things to solve. FPSs are in process of building bilateral agreements to do cross-border payments, but trying to build out on a retail level payment systems that operate with every country in the world. I think the solution might lie with the wholesale CBDC, and some of the people who follow that will know of, say, Mbridge, which is a project that uses wholesale CBDC to just do that, to have some kind of hub-based system that allows people to use wholesale CBDC to do cross-border transactions. And this is my last slide. So I like movie references. So if any of you know, Field of Dreams is a story about some crazy guy that built a baseball diamond in the middle of nowhere, and he thought, if I build this baseball diamond, all these old-time baseball players are going to come walking out of the cornfield and play. And it did work. In movies, it works. But this is not the way it works in the real world. And I think that's the hopeful the case that central banks want to make. We will build it and it will come. Well, there's a lot of work to be done yet to do that. So that's it for my presentation. And there's my email address. If you do want to get the slides, you just email me, or you can find me easily on LinkedIn. I go by the name Kiffmeister. That's my handle. So I'm easy to find.
Thank you, John, for this excellent keynote for the end of this day. Do we have any final question?
I have one that's a difficult one. My main concern with the ECB not being able to roll out the digital euro successfully after this commitment is that it could tarnish the reputation of the central bank. Is there any evidence that you know of that the failed pilots or the sort of silent rollback has in any of the cases affected the central bank's ability to do monetary policy?
No, and the average citizen doesn't really care. This is something that only the geeks like us and they're nerds, we worry about these things. But the average person probably doesn't even see all the news feeds on CBDC.
So, but do you think it's a risk for central banks that if they
commit?
So. Okay.
But I mean, I think you can do. I mean, I've also, and I do these workshops for central banks. We do talk about the potential impact of CBDC on monetary policy, and in fact, a CBDC could maybe, as some would say, in a positive way, like with the remunerated CBDC, and they're following an interest rate based policy. They can use that CBDC to reinforce policy. That's a possibility. But also, we talked about the crowding in versus crowding out of commercial banks, that if you do too much crowding out, you also undermine your ability to conduct monetary policy, because the commercial banks are one of your main routes to operate in monetary policy.
We have one more question.
Thank you. I have two questions very close to each other. The first is it correct? Is it right? Is it useful to discuss about CBDCs without the infrastructure, the blockchain as well, the net? And the second is we have the economy of things. It's just knocking at our doors. It's not real tomorrow, but it's close. And I think in this environment, we will have totally different procedures. We have smart contracts, and I'm sure they will implement tax payments. And my question is, isn't it a major factor to think about it? Because fiat, one aspect of fiat is to pay tax via fiat. And if we are in an economy of things, we need a similar payment solution. So isn't it necessary to have a CBDC alone on this aspect? Because the tax payment will be implemented in each smart contract in the future, and you have to pay it at once.
Yeah, I mean that kind of goes back to my purpose-bound money thing. That's where the central banks could start to experiment with that kind of theme and see where it goes. I think there's something to that idea, but that's not the way most central banks are approaching CBDC. They're approaching it in the Death Star sense, that they're hoping it's going to compete with fast payment systems and so on, which is a very basic requirement compared to what you mentioned.
But if you have a tax collection at the point of the contract, if you fulfill the smart contract, you have at once to pay tax. So it has to be delivered. The duty has to be fulfilled, and you have to pay it at once on chain. And it's not very close to the payment solution, but it is a very important factor you have to solve if you like to implement the economy of things.
No,
I don't know if I have.
I think you're right, though. I think you're right, and I think that's why I'm kind of keen on this Singapore thing. It was purpose-bound wrapped money, so I'm thinking of ways you can sneak CBDC into everyone's pockets, and that would be one way to go. You'd have a wrapped, purpose-bound money that once the smart contract's executed, it now disappears, and now that's just fungible, regular money you can buy coffees with, and it does nothing special at all. So I think that's. But I think if you include permanently these smart contract layers, I think, well, you're gonna, as the Fed was saying, that you're gonna undermine the no question asked, singleness of money, because now one person's CBDC is going to be different from another depending on their particular circumstances. That's the challenge. But you can get away from that if initially it does have the wrapper, or maybe there's ways you can put the wrapper on and off. But then once it's used, it becomes fungible, and then your no question asked money principle is still respected.
Maybe we can take this question off stage. I did IoT for 10 years. I have some answers for you, maybe, because I don't think that CBDC solved that problem, because most of them don't have smart contracts, first point, and yeah, many other arguments. But let's close this. We are over time. Thank you very much. It was a fun day today on the stage. Thank you very much.